This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. In this episode, you'll hear about a new company in the fintech sector called LendGrow. Our featured guests are co-head of VC at 10x Capital and investor at LendGrow, David Weisburd, and co-founder at LendGrow, Nish, Krishna. Headquartered in Reston, Virginia, LendGrow is a complete digital growth platform for local lenders. LendGrow aims to connect consumers with 1,000 plus local lenders that are often harder to find online and usually have better deals on loans. LendGrow was founded by executives that successfully built multi-billion-dollar portfolios at both big banks and credit unions. LendGrow's platform consists of one, RateBunni, a rate aggregator that has information on rate competitiveness and trends from 300 plus local lenders. Two, LendGrow Marketplace to pre-qualify and route borrowers to local lenders in real time. And three, Ask LendGrow recommendation engine to help local lenders take smart, data-driven decisions. I hope you enjoy this episode. Well, hello, this is Hall Martin with 10 Capital. Thank you guys for joining us. As you know, 10 Capital is a company that helps startups and entrepreneurs connect for funding. And today we have the co-founder at LendGrow, Nish Krishna, joining us for his company. And his investor is the co-head of VC at 10x Capital, David Weisburd. I want to thank you guys for joining us, Nish and David.
Yep, absolutely. Glad to be here.
Thank you, Hall.
So Nish, can you give us a short overview of LendGrow?
So LendGrow platform connects about 1,000 or so local lenders in that $100 billion in size. And we have different components to the marketplace and the platform. But the idea is to connect consumers with about these 1,000 or so local lenders that are harder to find online and usually have a better deal on loans. So that's what we do at LendGrow.
And so David, what was your background as an investor?
Thanks, Hall, for putting this together. It's always great to talk about our portfolio companies. I'm one of those venture capitalists that started out as an entrepreneur. So I started out back in undergrad in college, and I ended up growing the largest B2B ticket brokerage in North America. We were actually StubHub's largest supplier of inventory up until they were acquired by eBay in 2007. And after I graduated, I joined a classmate as well as another co-founder in a rival school. And we moved to Silicon Valley in 2009. Of course, we were very naive and didn't understand the interconnect between the private and the public markets. And due to our naiveness, we went around and ended up getting funded by some of the top investors at that point in Silicon Valley, including Peter Thiel, who at that point already had a good reputation due to PayPal, and GFJ and Jeff Clavier, and David Blumberg from Bloomberg Capital, and Arjun Sethi, who back then was an angel and now is with Tribe, another venture capitalist, and Gokul Rajaram, who back then was an angel and now is a board member of Coinbase as well as a prolific investor. And kind of got to see that and got to see how Silicon Valley works. And then I went to business school, and meanwhile, the company replaced management with what they call professional management. This was before the days of Andreessen Horowitz. And I moved back and started a consumer internet company after my MBA called Room Hunt. Ended up bringing that to 72 markets, raised less than $1 million, had learned my lesson. With iSocket, the company raised $18 million and sold itself to Rubicon Project, which was a good outcome. But in this case, we raised less than $1 million. And kind of concurrently to our Series A raise, decided to get acquired and sell. And then I became a venture capitalist in 2015. My very first investment has been actually in the news recently, Compass Therapeutics. I invested at a $15 million valuation, 1.5. And they just announced that they are going public in a IPO led by, or book run by Citigroup and Credit Suisse. So we're very excited about that. On top of that, I got to invest in a lot of great companies like 23andMe, DraftKings, which just came off of the lockup. So we returned a nice 9-figure sum to LPs, which is very exciting. Headspace, which has been in the news just because it's on fire in terms of a lot of subscribers. Tonal, which is an indoor fitness company that's growing quite significantly during COVID. Palantir, which was also in the news recently due to the IPO. And then Wish and Robinhood, we invested in the Series F as in Frank with Sequoia. And then other companies, which we think will be the next generation of that. And that was a single GP fund, which means, I was the manager and the investor and everything. And I decided, it was time to join a team. So I was recruited and joined to lead 10X Capital's venture arm and build up the venture practice. And since then, we've been quite active this year in a lot of different investments, a lot of great companies, which you'll soon hear of. And we also just announced that we were launching a SPAC as well, which I don't want to talk too much about, but it's out there if you Google it. And that's how we got here. And then with LendGrow, the CEO of 10X had followed the PenFed story very considerably, and he knew Nish's role there. And we understood the space. And there's just fundamental, we could go into the company, but there's fundamental economic reasons for why we thought this investment was very interesting.
So can you give us more details about what you liked about this deal, in particular the team and other aspects?
Yeah, so you'll see even venture-backed companies, a lot of them are, for lack of a better word, kind of me too or copycats, or just like really great design or really great user experience. And that's of course great, but that's table stakes. And of course, LendGrow has that as well. But fundamentally, what we were excited about is the economic disruption of, instead of somebody seeking a loan, you had access to 3 or 4 options in your traditional kind of online search. You now could go to thousands of lenders or hundreds of lenders at this point, hopefully thousands at some point. And then we also understood the community bank structure and how community banks really had issues with being able to deploy capital to kind of top tier lenders. So we got it from a supply and demand from an economic macro perspective. And then of course we had to basically take a look at the team and take a look at their track record. And most importantly, we were very excited to see that the team had worked together previously. Founder splitting, especially for an early stage company, is the number one source of issues. And that's officially. Unofficially, it's probably even more pronounced in terms of why companies don't work. So we were very excited about the team, the economic rationale, the traction. They've signed 7 banks, including Citizens, which is quite unheard of for a company this early. They've done over 30 million monthly in loan application. And in terms of just early on at this stage, we thought it was a very good bet.
Why do you think this company is going to be successful?
Yeah, so obviously team at the early stage, it's all team and market. The team is huge. The market is huge. There's over 1,000 mid-sized lenders that cover 30% of the lending market. It's really been overlooked, the space, by competition like LendingTree, Credit Karma. They work with larger lenders. Why is that? Because again, it's a consumer play. It's not very sophisticated. It's not really fintech. Well, I'm sure they would disagree with me. And with LendGrow, it's very differentiated. You get the payback reward. You have lower rates. It solves a very fundamental problem. If you look at every kind of billion and $10 billion company, at this point, everybody has a unicorn in their portfolio. We're very proud that we have multiple decade unicorns in our portfolio, and that's kind of the new standard. If you look at each one, none of them are just putting lipstick on a pig or some kind of new user experience. They're all fundamental economic shifts and economic benefits.
Well, you've seen the team in action over the past period of time. What challenges did you see them overcome?
The teams that you always want to fund are the ones that do the most with the least, because when you give them a lot of money, they do an enormous amount of traction for minimal funding. They've been able to develop loan hub capabilities and getting ready to launch there. They've been able to gather rates on over 300 lenders. Again, not to harp on it, but it's an economic disruption. The fact that you could get a lower rate is really what consumers care about, especially in this kind of market where people are struggling. And they did this with part-time engineers, which is quite shocking, and without a marketing budget. And despite all that, they're seeing 20 million loan applications every month. And they've done it largely through partnerships and through organic search.
So based on all of that, what excites you most about this opportunity?
The market and the upside potential is massive. There's 6 trillion assets in the space. I always kind of make fun of the situation, but 6 trillion is 6 billion times 1,000, right? You'll see sometimes in these pitch decks, you'll say massive 4 billion, massive $6 billion market. Well, you take 1,000 of those companies, which 1,000 is such a large number, it's kind of actually hard to conceptualize. We take 1,000 of those, and that's one LendGrow. So they're growing, and they're really kind of, again, bringing lenders online that haven't before had access. If you think about a community bank or a lender, they're not able to compete head to head with Bank of America or a Chase in terms of user experience. So again, that's kind of like those banks are great. They have a good user experience, but they're not really fundamentally helping the consumer as much as it would be good for them to. And it's a huge market that's overlooked. Why is it overlooked? To kind of ask myself a question. And the answer is because Nish and the team at PenFed and through their experience have been able to understand this market from the inside. Typically, a lot of the great companies are started by insiders that have what's called earned secrets. Andreessen Horowitz is very famous for this concept, which is basically you have to be within the industry to even see this problem. So they've been in the industry, they've paid their dues, they've seen everything, they've built it already. It's very rare that you get to bet on a team to do something that they've already done. So usually somebody gets good at basketball, they, for whatever reason, want to play baseball in this space. So that's pretty exciting.
So how are you helping the team? What role are you playing here?
We're guiding them in business strategy. So 10X, we're a fundamental fintech investor. I did mention some non-fintech names. That's actually been my doing. I'm the only non-fintech investor in the entire team or generalist investor. So I brought my portfolio with me. But in terms of 10X, has a legacy of several decades of investing in fintech, which is not only relationships, which is really important, but technology. Our sister company, The Number, pretty much services every large institution out there, like the Angelo Gordons of the world. So they have the data and the pipes to really help a company. We've been instrumental. Another one of our portfolio companies, which I think Nish knows, AlphaFlow, we came in before they had after they had raised their seed round, before they had raised a Series A, and helped them go out and raise a $500 million facility, which is kind of unheard of before Series A. And of course, we're helping on the board, helping on the advisors, and we're spreading the word about LendGrow with other institutional investors. Believe it or not, it's not a meritocracy. If you're not the large players, which I won't mention because this is going out to a handful of people, the large players, if they don't know about you, you don't exist. And you could take this actually to an extreme. Sequoia might back you, but if you don't make it out to New York, you don't take the time, you don't kiss the ring, you don't have those relationships, you're not going to get the looks until you're maybe a Robinhood, right? Which of course is one of our investments. But at some point they have to meet with you and take, but if you're talking about kind of 10 to billion dollar companies, you need those relationships, and that's what we bring.
Great. Well, in the last few minutes that we have here, what else should the investors know about the company that we haven't covered so far?
Yeah. So first of all, again, I hate to kind of repeat things, but startups are all team and market and traction, right? So they've just signed up, for example, an advisor and a board member of a company that just had an IPO. They've been able to leverage, and 10X has taken a substantial stake in the company. They've been able to leverage our team and our technology. And, they have the who's who in terms of advisors and people around the company, people from the Lending Tree CMO to executives from McKinsey, Pagaya, Capital One, TD Bank. Again, these are not only amazing brands, but for this stage of the company, we're not talking about, hopefully we'll be talking about LendGrow being a unicorn in 3 years. And that's what we're betting on. But today for seed company at this valuation, it's pretty phenomenal to even get one of these people, let alone, 5, 6 of these kind of advisors, investors.
Well, thank you for that. Nish, can you give us some recent updates about the company and recap the offering here?
We were doing a crowdfunding round that we wanted to just kind of more help the spread the word with the consumers. So that we had a very strong finish with that. We are still kind of just in last few days of closing it. The round has closed. We're just kind of wrapping it up all up. But I think we probably raised over 700K using that round. We are looking to raise about 2 million at this stage, which I would call as the seed stage. And I think there's room for about 25 or so more investors to come in to the Reg D channel. We want to leave a little bit of room in there for some institutional investors that we're talking to. But so I think another month, 2 months is how far I see the round being open. So that's on the capital side, and on the general sort of business side of the house, we are, of course, the team is very excited with this loan hub capability that we have developed over the past 3 months. We are getting ready to launch it, and I would welcome anybody whether they're interested in investing in us or otherwise to come and check it out. It's in this environment. So we are launching with mortgage refinance and personal loans. So it's very timely. All of us are looking to refinance our mortgage. In fact, I did that, and I wish I had a tool like that. And it allows you to search for 300 or so lenders, smaller lenders out there. And from our own personal experience, we know that some of the best deals come from your broker or some of your friend, who has mentioned about who has these best rates. So that capability is going to be online in a month or so, and the team is very excited. And sort of like that's where all of the attention is beyond sort of operating the marketplace, which we launched earlier this year.
Well, thank you, Nish, for the update. David, thank you for your contribution and input. It's been very helpful. I want to thank you guys for joining us today.
Absolutely.
Thank you very much, Paul.
Great talking to you.
Thank you, Nish.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.